This is our third quarter earnings recap for Ford Motor Company. Buckle up. We're diving into Ford's latest numbers. And the market's already reacting. Ford shares dipped over 4% after hours. And this was despite beating earnings predictions.
Yeah, there's definitely a lot to unpack here. This contrast between strong performance and cautious future guidance is exactly what we'll be exploring today.
Okay, so let's unpack this. We've got quotes straight from Ford's CFO, John Lawler, of course, press releases, and some pretty in-depth financial reports. We'll be using all of this to try and paint a complete picture.
What I find fascinating is this kind of tension between Ford's success in certain areas and then their cautious guidance for the coming year. Like, take their commercial and fleet business, Ford Pro, it's doing incredibly well. Hybrid vehicles are at a big bright spot too, but their electric vehicle unit, Model E, is still grappling with losses.
Yeah, it's a bit of a mixed bag, isn't it? And then there's the recurring issue of warranty costs.
Yeah.
This is definitely something investors are watching very carefully.
Absolutely. Warranty costs have impacted Ford's earnings before, so their improvement is good news for sure, but it's definitely something to keep an eye on.
For sure. Okay, so let's start with the third quarter performance itself. Ford reported a 5% increase in revenue, marking their 10th consecutive quarter of year-over-year growth.
This consistent growth is pretty impressive. It indicates positive momentum for sure, which seems to be driven by what Ford calls a freedom of choice product portfolio, catering to both retail and commercial customers.
So it's not just one segment carrying the weight. Their diverse offerings seem to be working in their favor.
Exactly. And when we look at the numbers, Ford's adjusted earnings before interest and taxes, known as EBIT, came in at $2.6 billion. That's a solid 16% jump compared to the same period last year. And for our listeners who might not be super familiar with the financial jargon, EBIT basically tells us how profitable a company is from its core operations.
So a 16% jump in EBIT is a good sign. Sounds like they're managing costs well and generating healthy profits, despite all the challenges in the auto industry.
Right.
But speaking of challenges, let's address those warranty costs. John Lawler did mention a slight improvement year over year.
Which is positive. But like you said earlier, those unexpected warranty costs in the second quarter, they really shook things up. Investors are understandably sensitive to this metric now.
They are. But Ford seems to be taking steps in the right direction. Lawler highlighted that their 3-month in-service quality has significantly improved for the 2024 models compared to 2022.
Oh, so proactively trying to address the root of the problem. That's encouraging.
It is. But the financial benefits of these quality improvements might take some time to really show up. We'll have to see how this translates to their bottom line in the coming quarters.
Makes sense. Now let's dive into Ford Pro, their commercial and fleet business. This segment is a real powerhouse for them.
It is. They reported a whopping $1.8 billion in EBIT, with a margin of 11.6%. The revenue also jumped by 13% year over year. This success is really fueled by the strength of their Super Duty trucks and those transit vans, which are like cornerstones of so many businesses. And we can't forget about the growing demand for Ford Pro Intelligence, their software suite for fleet management. A 30% increase in paid subscriptions, reaching almost 630,000 users. That's huge.
It really is. It shows that Ford is strategically leveraging software and connected services to create recurring revenue streams. This digitalization trend in the automotive industry is something they're tapping into effectively.
It's almost like they're building a tech company within a car company.
You could say that. Now let's turn our attention to Ford's electric vehicle unit, Model E. The picture here is a bit more complicated. They reported a loss of $1.22 billion for the quarter.
That's a significant loss. Even though, yeah, I know, it's an improvement from previous quarters. It really highlights the challenges Ford is facing in scaling up its EV operations and reaching profitability.
It does. The EV market is fiercely competitive these days. Ford is up against well-established players, as well as a wave of new companies entering the market. It's a tough landscape to navigate.
And this is where Lawler's emphasis on cost reduction comes in, right? He said Ford is designing future EV models to be cost competitive, with the lowest cost players globally.
Exactly. They're acknowledging the pricing pressure in the EV market. It's not enough to just have great EVs anymore. You need to produce them efficiently and offer competitive pricing to gain market share.
Yeah, it sounds like a strategic imperative, especially considering the overall EV market dynamics. Ford pointed out that industry revenue has remained flat at $14 billion since the first quarter of 2023, despite a 34% increase in sales volume.
Which means that prices are going down, while the number of EVs sold is going up. That tells you it's a cost game in the EV sector right now, and Ford is keenly aware of this reality.
So the question is, how will they execute on their cost reduction strategy in the coming months and years? It'll be
Yeah.
interesting to see how that unfolds.
Absolutely. Now, let's switch gears for a moment and talk about an interesting trend. Ford's success with hybrid vehicles. Their global hybrid sales surged by 30% in the third quarter.
And they're dominating the U.S. hybrid truck market with a whopping 77% share. Hybrid truck sales were up an impressive 42%.
That's a significant market share, for sure. It seems Ford's strategy of offering a diverse range of powertrain options, giving consumers the choice between gasoline, hybrid, and fully electric vehicles is paying off.
Especially in the truck segment, where customer preferences are evolving, but not yet fully shifted to EVs. It's a smart way to hedge their bets and appeal to a wider customer base, while the market transitions towards electrification.
Indeed, it'll be fascinating to see how this hybrid strategy plays out in the long run, as the EV market matures.
Now, let's circle back to Ford's overall financial health. Their adjusted free cash flow for the year to date is $5.9 billion, with a cash conversion rate of 74%. This means they're effectively turning their profits into cash, a good indicator of their financial strength.
And they're clearly committed to returning value to shareholders. They announced a fourth quarter regular dividend of 15 cents per share, which shows confidence in their future prospects.
That's a positive sign for investors, especially considering the uncertainties we see in the broader market right now. Okay, so we've covered a lot of ground. Ford's overall performance is solid. Though there are those lingering concerns about warranty costs, Ford Pro is a clear success story. While their EV unit, Model E, faces some serious challenges. And then there's the interesting dynamic of their hybrid strategy. It's a complex picture.
It is. It's a reminder that the automotive industry is in a period of rapid transformation.
Speaking of transformation, John Lawler highlighted Ford's ongoing efforts to restructure their global business, tailoring their product lineup to segments where they have a deep understanding of customer needs.
This focus on strategic alignment is crucial. It allows Ford to leverage its strengths, manage risk, and really set themselves up for success in the long term.
It makes sense. But this brings us back to our initial point. Despite the positive third quarter results, Ford is guiding towards the low end of their full-year earnings forecast. Why the caution?
That's a great question. To understand that, we need to delve into the potential headwinds Ford is anticipating and what those might tell us about the road ahead.
Sounds like the perfect transition to the next part of our deep dive.
So let's explore why Ford is forecasting earnings on the lower end of their predictions. Even with a strong third quarter, they're now expecting adjusted EBIT, earnings before interest and taxes, of about $10 billion for the full year 2024. That's at the bottom of their previous projection of $10 billion to $12 billion.
That is a pretty significant adjustment, especially considering their performance this quarter. What factors are contributing to this shift?
Well, a few things seem to be at play here. Lawler mentioned inflationary costs, specifically impacting their joint venture partner in Turkey, Ford Otosan.
Ford Otosan manufactures their transit vans in Europe, right? So these increased costs could be cutting into their profit margins.
Precisely. And with the current geopolitical and economic uncertainties, it's understandable that Ford is taking a cautious approach. These cost pressures might continue or even get worse.
Yeah, it sounds like they're facing pressure on multiple fronts. Not only are there those inflationary concerns in Turkey, but we also discussed the ongoing warranty and inflationary cost concerns earlier.
That's right. It seems Ford is navigating a pretty tricky landscape.
It's like walking a tightrope. They're trying to keep your balance and move forward, while facing potential obstacles from all sides.
That's a great analogy. And on top of these internal and external pressures, Ford is also predicting softer industry pricing.
So not just Ford-specific challenges, but a potential softening in demand across the whole car market.
Exactly. It seems they're anticipating a slight slowdown in industry growth, which could definitely impact their overall revenue.
This makes their focus on cost reduction even more critical, doesn't it? If the market softens, maintaining profitability will depend on controlling expenses.
Absolutely. It's all about efficiency now, finding ways to do more with less, optimizing their operations, becoming leaner to withstand any potential downturn.
Essentially battening down the hatches and preparing for a possible economic storm.
Yes, you could say that. However, it's important to note that despite this cautious outlook, Ford remains committed to a profitable and growing EV business.
Right. They haven't adjusted their full-year loss projection for Model E, which remains at about $5 billion. It seems like they're still investing heavily. And taking a long-term view on electrification?
They are. They're not shying away from the challenges of the EV market. They're doubling down on their strategy of cost optimization, scaling up production, and expanding their electric vehicle lineup.
Yeah, it's a difficult balancing act, isn't it? Managing short-term profitability while investing in the future of the company.
It is. It's the tightrope many traditional car manufacturers are walking right now.
Ford's situation feels like a microcosm of the larger trends we see in the automotive industry. The shift to electric vehicles is happening, but it's not a smooth ride.
It's not. Companies are facing huge upfront investments, intense competition, and the need to transform their manufacturing and supply chains.
Not to mention the macroeconomic headwinds, inflation, potential recessions, geopolitical uncertainties. It's a volatile environment for any automaker to operate in.
It's a true test of resilience, and it'll likely separate the winners from the losers in the coming years. Ford seems to be taking a pragmatic approach, not putting all their chips on electric vehicles just yet.
Right. They're leveraging their strengths in traditional vehicles, like trucks and commercial vehicles, while building out their EV capabilities.
It's like building a bridge to the future, while making sure the current structure remains stable.
Exactly. A smart strategy in a market as dynamic and uncertain as this one. Now, let's shift our focus for a moment to the individual investor. What are the key takeaways they should consider when evaluating Ford as an investment?
Well, first, I think it's crucial to look beyond the headlines and understand the underlying trends driving Ford's performance. The success of Ford Pro, the challenges in Model E, the efforts to improve quality. These are all critical pieces of the puzzle.
It's not just about hitting or missing earnings targets in a given quarter. It's about their long-term strategy, their ability to execute, and their resilience in the face of challenges.
You've got it. Investors should also pay attention to Ford's commitment to returning value to shareholders. That dividend announcement sends a positive signal and demonstrates confidence in their future prospects.
So as we wrap up this part of our deep dive, what's the key question investors should ask themselves about Ford?
The million-dollar question is this: can Ford successfully navigate the transition to electric vehicles while maintaining profitability and generating shareholder value?
And that's a question we'll continue to explore in the final part of our deep dive. So we've established that Ford is at a crossroads, balancing current profitability with these big investments in electric vehicles.
It's a delicate dance for sure. Stay nimble, keep moving forward, but don't lose your balance.
Which brings us right back to that big question. Can Ford successfully make this transition and still deliver value for shareholders? To get some answers, let's dig a bit deeper into their strategic decisions, see what those tell us.
Okay, one key element that really stands out to me is their laser focus on specific customer segments.
Right, like their dominance in the commercial and fleet market with Ford Pro, they're really leveraging their strength there.
And it's a smart move. Ford Pro provides this stable source of revenue, allows them to capitalize on the increasing demand for commercial vehicles.
Especially as more businesses choose to electrify their fleets, Ford is in a prime position to grab that market share.
Absolutely. Now, another critical part of their strategy, and one we've talked about a bit already, is cost optimization. And this applies to the entire company, not just Model E.
Yeah, Lawler really hammered home that point. Streamlining, becoming more efficient, finding ways to cut expenses across the board.
Right, and that's where those global restructuring efforts come in, streamlining operations, optimizing that manufacturing footprint, making some tough choices to make sure they remain competitive long-term.
So it's all about creating a more agile and adaptable organization, one that can quickly respond to shifts in the market.
Exactly. And of course, let's not forget the importance of innovation. Ford's pouring resources into connected technologies, software, self-driving capabilities.
Yeah, it's not just about building cars anymore. They're developing this whole suite of digital services, enhancing the user experience, creating new revenue streams.
That's such a crucial point of differentiation in today's market. It's about building a complete ecosystem, one that connects vehicles, drivers, the world around them.
It's almost like they're transforming from a traditional automaker into a full-fledged mobility company.
That's a great way to put it. Now let's tie all this back to shareholder value. Ultimately, all of Ford's strategic decisions are aimed at creating a business that's more profitable, more resilient, and more sustainable.
And that's the kind of business that's more likely to deliver value for shareholders over the long haul.
Precisely. Now, of course, there are risks and challenges ahead. The macroeconomic environment remains uncertain, the EV market is incredibly competitive, and technology is always evolving.
It's a dynamic landscape for sure. Ford needs to stay nimble, adapt quickly,
Hmm.
and continue to innovate to stay ahead of the curve.
Absolutely. It's also important to remember that there are different opinions out there about Ford's future. Some analysts are pretty optimistic. They're pointing to their strong truck sales, their growing hybrid business, and their commitment to EVs.
Right, while others are more cautious, highlighting those persistent warranty costs, the losses in Model E, and the possibility of a broader economic slowdown.
It's a mixed bag. Ultimately, investors need to do their own research, weigh the risks and the opportunities, decide for themselves whether Ford aligns with their own individual investment goals.
Well said. As we wrap up our deep dive today, let's leave our listeners with a final thought-provoking question.
Okay, I like this. With Ford's diverse offerings, spanning gasoline, hybrid, and electric vehicles, how might their strategy impact the broader shift toward more sustainable transportation?
And what role will they play in shaping the future of mobility? Those are some big questions worth pondering as we witness this ongoing evolution of the auto industry. Thanks for joining us for another deep dive.
It's been a pleasure exploring all this with you.
Until next time, keep learning, keep exploring, and keep diving deep.